Welcome back. Thank you so much for staying tuned in. Well, the countdown to the biggest event for the market, will the union budget cheer the bull run, or are we in store for a short-term correction? What will the finance minister's focus be on? ET Now conducted a CIO survey to understand the pulse of the market. Anisha Jain is here with the highlights. Anisha.
ET Now is back with the CIO poll, and this time we put the spotlight on the impending budget and we posed the questions around that to the top CIOs and the market men. And the first question, of course, was what would be the biggest focus area of this budget? Clear indication coming in that infrastructure, which has been the focus point of the government, is something which is likely to continue. Others believe that social spending might get a bit of a fillip. So there are some 42% people who believe that social spending could be the focus area, but not much expectation with respect to tax rationalization or a special push to manufacturing. The other question we posed to the market guys was whether there is a possibility of a big sell-off post the budget. Now, of course, it's a 50-50% scenario there, but if you look at it, almost 70% of the people believe that no, there is not a possibility of a huge sell-off, though there are some, almost 30-35% people believe that there could be a correction in store for us post the budget as well. What could be the measures which could be announced then in the budget? Will there be any measure to curtail the F&O speculation and the F&O speculative trading? Well, large part of the street is mentally prepared for any such announcement coming in. Almost 67% people believe it is impending. Capital gains, that continues to be the big chatter around the budget time. However, this time around, almost 67% people believe that there is no expectation right now for tinkering in the capital gains tax. Yes, there's a possibility of it. So 33% people still believe it can happen, but the large part of the street is not expecting a big change there. The next question that we pose is, what about the personal taxation front? Because there's a lot of chatter that consumption still needs a bit of a push. There the street is on board with that fact that there could be a bit of a tinkering as far as the personal taxation is concerned. Maybe the brackets could be expanded so that there is a bit more leeway for consumption to pick up, and that's the verdict that we are witnessing right now. The other questions that we posed included the like of which sectors are the ones which is going to be the focus area. Well, IT, FMCG, pharma, the defensive place pretty much, which hadn't run up as much as the rest of the space, is the place where they're willing to put fresh money to work. There's also energy, defense, power that continues to be in the focus area. Financials, interestingly, has underperformed massively, but if you're looking at the second order of preference, financial finds it's mentioned there. So interesting bit coming in there. A couple of other questions that we asked them was what they're most worried about in the markets right now, whether it's earnings, whether it's the FOMO feeling and the liquidity, or whether it's the valuations. Large part of the street is still worried about valuations. They're not worried about earnings. So fundamentals are not the worry area for them. It's the valuation and the FOMO feeling. And the biggest question of it all, of course, what could be the Nifty high for the year? A couple of people replied that they do anticipate 27,000 on the index by the end of the year, but the large part of the street was concentrated around 25,500 to 26,000. So maybe, Ajay, we are in for a Nifty rally, which is almost 1,500 points from here on till the end of the year. But yes, not perhaps at 27,000 on the Nifty this year. That's what market men are telling us.
All right, Anisha.
If you like this video, then like, share and subscribe to ET Now.